Hi, welcome to the video of event-based revenue recognition in sale from stock scenario. Event-based revenue recognition calculates and posts real-time revenue and cost adjustment for sales orders. Now, before we go into the detail of event-based revenue recognition, we need to first understand the concept of revenue recognition first. Unlike cash accounting, in contrast, where the revenue is recognized when cash is received, no matter when the goods or services are sold. In case of revenue recognition, this principle is a cornerstone of accrual accounting together with the matching principle. In this case, the revenues are recognized when they are realized or realizable and are earned no matter when the cash is received. According to IFRS 15, revenue from contract with customer, which is effective from January 1, 2018, it contains new requirements regarding recognition and reporting of revenue and provides a principle-based five-step model to be applied to all contracts with customers. In this video, we will be discussing event-based revenue recognition in sale from stock scenario. I will be demonstrating the whole process in 1808 cloud version using Fury apps. Uh, Before we go ahead, let me tell you that the process which do not write any prima nota like the plan data that do not directly result in revenue recognition posting. In this video, we'll be covering both standalone selling and bundle sale as well in the context of IFRS 15. In this video, we'll cover two example scenarios. One is normal sale and the other one is bundle sale in the context of IFRS 15. In normal sale, it will be a normal material TAN item category, which is make to stock item, and we'll see how the total um, sales order creation, then delivery and billing happens, the total sales cycle, and how the revenue recognition happens in different stages of sale. And in the next example, we'll see uh, the concept of bundle sale. I will discuss that part in later, what is the bundle sale, and in that case also we will see how the revenue recognition calculation happens. So in the first example, we will create a normal sales order type OR, item category TAN, that is standard item. Currently, as of 1808 cloud version or 1809 on-premise version, it only supports item categories TAN, that is standard item, and TANN, that is free of charge item. Uh, there are many scenarios, in fact most of the scenarios in sales which are not covered under the revenue recognition calculation, like free of charge delivery, sales order processing with customer down payment, customer return, sales order contract management, returnable processing, customer consignment, intercompany scenarios, third party process. So lots of processes which are still not covered under 1808, uh, but they are planning to bring in some new processes as of 1808, like sales of services, supporting the bundling of stock item and one-time services. So I'll discuss that part when we'll be discussing the bundling part. But right now there are a lot of processes which are not covered under event-based revenue recognition. Maintain the selling price for the material in the sales order, and then we are good to go. Now create outbound delivery for the sales order and do the PGI. After the PGI, if you use the app event based revenue recognition sales order. This app is basically used to view the recognized revenue for sales orders at any point of time. You can see that the recognized revenue uh, is 17.55 USD. That is the net price of the sales order item, and you can see that in the balance sheet also accrued revenue account has been hit. This is the view for a local gap, that is LG. You can also view uh, using accounting principle IFRS how the accounts have been affected and how the recognized revenue happened. You can see that it's more or less the same. The recognized revenue and accrued revenue, these are the accounts which have been affected, and also as COG is affected, so you can see the recognized cost of sales as well. You can adjust the recognized revenue and recognized cost of sales by clicking on the button enter temporary adjustment. Here the pop-up will come with the already recognized cost of sales and revenue. You can modify that and you can simulate the effect of it, and you can post it if you want. Like for example, in this case I have increased the revenue, recognized revenue, from 17.55 to 20. It should affect my asset, and the corresponding recognized revenue P&L account, sorry, the revenue adjustment P&L account should also be affected. Similarly, instead of revenue, if I increase the cost of sale, it will affect my deferred cost of sales, which will again affect my asset part, which will increase my asset. And I can this way simulate by increasing or decreasing the recognized revenue if I want, and if even I can post it at the as a period end activity, period closing activity. So here you can see the results in chart format as well, where you can see different parameters, different dimensions, like recognized revenue, actual cost of sales, actual billed amount. So these are the parameters that you can see at different point of time. You'll see that more and more parameters, like right now there is no actual revenue figure. So once you do the actual billing, you will see those parameters are also coming into the chart. And also you will see some other dimension, other reports as well in this particular app, like periodic view. In the periodic view we can see all those details in a tabular format. Another useful app is sales order actuals. In this activity, in this app, you can see the sales order actual data report. In this report, you can set the dimensions for reporting by choosing rows and columns. Actual figures are viewed by selected dimensions into rows and columns according to the reporting requirements. The rows and columns here are already pre-selected. While running the report, we can we will give the following data, like the ledger fiscal year. Also we'll put the ledger. If we want to see the result, sales order actual data report in local gap, then we'll select the leading ledger, that is a 0L, and the company code and the sales order. If we want to view the report in IFRS ledger, then we will select ledger group 2L, and then you can run the report. Apart from the normal standard entry that happens in a normal sale from stock scenario during PGI against outbound delivery, that is consumption account debit to stock credit, uh, one more entry which have happened here, that is WIP accrued revenue account debit to revenue adjustment account credit. That is a P&L account, by the way, and accrued revenue account is a balance sheet account. Now from here I will jump to the GL balance. I will see the total GL balance for a particular period, for a particular ledger. First, I will see the balance of this GL, the WIP accrued revenue account balance for the latest period for leading ledger 0L, and from there I will go to the line item detail and exactly see what is the entry that was posted during the delivery, PGI. I can also do the same for IFRS ledger, the 2L as well. So I mean, the thing that I want to show here is that the power of navigation from this report. So this is the journal entry that got posted during PGI in IFRS ledger, and next we will see what was the document that was posted in leading ledger. You can see the postings are same with the difference of the document number in case of both the ledgers. As part of the period end activity, you can run the app run revenue recognition sales order to perform some period end adjustment. The things that happen using this app are as follows. First, it can net the contract asset against the contract liability on the sales order item level. Second, it can clear the contract asset and contract liability on sales order header level. Third, it can correct the real-time revenue recognition postings. And fourth, it can recognize the unbilled revenue if there is any. So you can run this transaction with the sales order at the period end, or you can run it without the sales order. So all the sales orders which are relevant for that particular period for which you are running the revenue recognition will be affected. You have to select the accounting principle here, and as you can see, for local gap, the accrued revenue cumulative, that account is affected. But if you run the same app, the same transaction for accounting principle IFRS, you can see instead of accrued revenue, it will affect the unbilled revenue. So that means the amount which is lying there in the accrued revenue in the IFRS ledger, it will be reversed and it will go as unbilled revenue. So I'm simultaneously I'll be uh, toggling between these two apps to see how it affects the actual recognized revenue and the balance sheet when I'm running it for the IFRS. But for local gap, it will not affect anything. It will remain the same. As you can see, the revenue recognition document has been posted as part of the period end activity when I'm running this event-based revenue recognition for the sales order. But for local gap, there would be no such postings. It will remain all the same. Now, if I run the sales order actual data report for IFRS ledger, I'll see that the accrued revenue now has become zero. Instead of that, the total amount has shifted to unbilled revenue. If I drill down to the line item detail, I can see the actual posting that got posted during the revenue recognition run, the document that got posted during the revenue recognition run, through which the amount got shifted from recognized revenue WIP to unbilled revenue WIP. When billing happens against the outbound delivery, let's say in the next period, there are three accounting documents which gets generated. The first document where the actual revenue is generated. The other two documents are for revenue recognition process. One is for leading ledger and the other one is for IFRS ledger. In both the documents, the posting is same. By the net price of the sales order, the deferred revenue, WIP deferred revenue get created, and the revenue adjustment P&L account gets debited. In the event-based revenue recognition report, we will have one more dimension for billed revenue, the actual revenue. Also in the balance sheet, we will have one more entry in the liability side for deferred revenue. So at this point of time, if you see the balance sheet, At the asset side, we'll have one entry for unbilled revenue, and at the liability side, we'll have one more entry for the that is deferred revenue. For accounting principle local gap as well, you will see the same entries with the difference of unbilled revenue and accrued revenue that we have already discussed, that got posted during the period and closing activity. The remaining entries like deferred revenue and the actual billed revenue, these entries will be the same for both accounting principles. Now, if you run the actual sales order data report, we will see that for the local gap, the leading ledger, you will see that both the accrued revenue and deferred revenue are kind of nullifying each other, and the recognized profit would be the differential between actual cost of sales which generated during the delivery and actual billed revenue that is during the billing, final billing. Now, as the final billing has been done as part of period and closing activity, if I run the event-based revenue recognition for the sales order for local gap, as I can see, there is a revenue recognition document which is posted, and both the accrued revenue and deferred revenue amount has become zero. Similarly, run it for accounting principle IFRS, and the result is the same. Both accrued revenue and deferred revenue and unbilled revenue, all the three accounts balance is zero. If I run the event-based revenue recognition dashboard report after the period and closing activity, I can find that the balance of both deferred revenue, accrued revenue, and unbilled revenue, all of them, all the accounts balance have become zero after the period and closing. It is true for both the local gap and IFRS. The same is reflected in the sales order actual data report. As you can see, the balance is zero for all the balance sheet account, the WIP balance sheet account, after the final billing is complete and period and revenue recognition run is done. If I go into the detail of the line item, I can find the entry that happened during the period and closing activity for the event-based revenue recognition run for the sales order. So basically, as you can see in the period end, when the final revenue recognition run has happened for the sales order, whatever entry that happened for the accrued revenue and deferred revenue WIP accounts have been reversed. Accrued revenue account has been credited and the WIP deferred revenue account has been debited. The sales order actual data report for IFRS ledger, we can see that all the three accounts, deferred revenue, accrued revenue, and unbilled revenue, are zero balanced now. If you go into the line item detail, you can find the final entry that got posted during the period and closing for IFRS, and you can see that the unbilled revenue account got created and the deferred revenue account has got debited. So this concludes the normal sales process. In the next example, we will discuss about sales bundle or bundle sales as I call it. There is a reason that we do not call it as a sales kit, because that is something that is not supported by revenue recognition. So there is a distinct difference. So let's give a business scenario example so that you can understand it better. Let's say a printing solution company which sees an opportunity to sell into mid-size market with a bundled offering with a single attractive price for a bundle. So let's say the print starter bundle consists of one printer machine, one paper feeder, one installation service, and and quarterly AMC services. So if these items were sold separately, it would have a separate standalone selling price or SSP. So there are three price elements in bundle sales for IFRS 15 context. One is standalone selling price, that is already explained. Second one is transaction price. That is basically the summation of individual line items in the bundle, and which is actually the reduced price. So if they were sold separately, it had a separate price, which is a higher one, which is called standalone selling price. And if they are sold in a bundle, they have a reduced price, so that is called transaction price. And that is basically, if we sum all the line items together in the bundle, it will get the transaction price of the whole bundle. And the third one is a allocated revenue, which is basically a calculated figure, which is derived from the transactional price, that is the total price of the bundle. And the individual allocated revenue will be calculated by the apportionment of the standalone selling price. In case of bundle sale, the revenue recognition happens in 5 steps. In the first step, identify contract, where the system automatically identifies the sales order as a revenue recognition contract. In the second step, identify the performance obligations. So in case of a bundle sale, each line item of the sales order becomes a distinct performance obligation. Uh, Third step is determine the transaction price. So system identifies the net value of the sales order as the total transaction price, which is basically the total price of the bundle, sales price of the bundle. Fourth one is allocate transaction price based on fair value or standalone selling price. So basically, in this step, the allocated revenue is calculated for each performance obligation, and that is done based on the standalone selling price with the apportionment of each item standalone selling price. So at one part we have standalone selling price, and the other part we have the total transaction price. Based on these two, based on the ratio of the standalone selling price and the total value of the transaction price, the allocated revenue is calculated. And the fifth step is recognize revenue. This step, like in case of normal sale also, when the goods issue happens, the revenue is recognized, and accrued revenue account is hit with the revenue adjustment, PL account is created. And when the final billing happens, uh, the reversal of that posting happens. Also, in case of period end closing, you have to run another app called revenue recognition of EventBased, and based on that, the final unbilled revenue gets reversed and everything. So I'll show all these things in detail. Let's straight away create the sales order, bundle sales orders. It is normal sales order only, with the difference that it will have multiple sales order line items, which contains the total bundle. And here there are two important pricing elements. For each sales order line item, we will have two pricing condition. One is SSP, that is standalone selling price, and the other one is transaction price, which basically contains the total price of the net price of the sales order. The standalone selling price, or estimated standalone selling price, can be maintained or uploaded like other condition types. For each performance obligation, the SSP automatically appears as condition type in the pricing procedure. If the SSP is missing or for a performance obligation in the sales order, the sales order cannot be saved. To proceed, the user can manually enter the SSP directly into the sales order or maintain it in the condition record. The user can also override the SSP that the system populates in the sales order. Now maintain the net value so that the transaction price of the sales order is calculated. Once the sales order is saved, the system automatically allocates the total transaction price to each performance obligation in the sales order based on the relative standalone selling price of each distinct item. The allocated amount for each item in the sales order, including the basis for allocation, can be viewed via the app Allocated Revenue. This report is only relevant for IFRS bundling. So basically what happens is that the transaction price or the sales price is divided based on standard selling price ratio for each line item of the sales order. Now let's do outbound delivery for the sales order and do TGA. Now if I open the event-based revenue recognition report for the sales order, for local gap I can see that the entry is quite the same as normal sale. The accrued revenue account has been debited with the transaction price, with the P&L of revenue adjustment account has been created. In case of IFRS, the posting is almost the same, with the difference that the recognized revenue is not as per the transaction price, but it's as per the allocated revenue. You remember that the transaction price was 50 USD and the allocated revenue was 55.71 USD. So the recognized revenue and the accrued revenue, both these postings happened as per the allocated revenue price, not the transaction price. The posting is the same for the other line item as well. The sales order actual data report shows the following entry. It is the same as the traditional sales. This is the IFRS ledger view. Now, if I run the period end closing activity, as part of which I run the run revenue recognition for sales order app for the period in which the delivery and PGI happened, let's say the billing will happen in the next period. In that case, for accounting principle local gap, there would be no change in the entries. But if I run for accounting principle IFRS, there would be uh, some major change. As we saw in case of normal sales, the unbilled revenue account is hit during the revenue recognition run at the period end, and the accrued or deferred revenue account is also hit. So basically, as we saw before, that the accrued revenue, in case of IFRS, the accrued revenue account was hit by the allocated revenue price, which was 55.71. So when we run a revenue recognition app, the unbilled revenue is hit by the transaction price, that is 50 USD. So basically, the accrued revenue, which was 55.71, is decreased by 50 USD, and that goes as unbilled revenue. So the accrued revenue now remains as 5.71 USD. Similarly, for the second item, that is line item number 20, the accrued revenue was 15 USD. Now it has become minus 5.71 USD because the unbilled revenue has become 15 USD, which was the transaction price. Now, as you can see, for line item 10, uh, there is balance in the accrued revenue because the transaction price is lesser than the allocated revenue price. And in case of line item 20, the balance is there in the deferred revenue because the transaction price is more than the allocated price. So in the header level, the opposite entry happened, so that at the total sales order level, the balance of allocated revenue, sorry, accrued revenue and deferred revenue is zero. This is done as a period end activity to net the contract asset against contract liability on the sales order level. So in the revenue recognition dashboard for the line item 10 for IFRS accounting principle, you can see that the total accrued revenue has decreased from 55.71 to 5.71, and the balance has gone into unbilled revenue. In case of line item 20, the unbilled revenue has become 15 USD, which is the transaction price. The accrued revenue has become 0 from 9.29 USD, and the differential between accrued revenue and the unbilled price has gone into the deferred revenue, which is in the liability side. Apart from the sales order line item 10 and 20, we have also an entry for the header now in the sales order actual data report, where as I said before, to balance the contract asset and liability, it has created a contra entry in the header level. If we go into the line item, we can see that there are two entries which got posted during the revenue recognition run for both line item 10 and 20. One is for 10 and the other one is for 20. For this is the entry for line item 20, where the accrued revenue which got posted during PGI got credited, and the corresponding entry got posted to deferred revenue and unbilled revenue as per the calculation that explained before. And for line item 10, the accrued revenue that got posted before is again got credited, and the corresponding entity got debited to the unbilled revenue account. Now let's complete the final billing for the sales order for both the line items for the whole bundle actually. Now after billing, there are three accounting documents which got generated. One is to post the actual revenue, the billed revenue with the transaction price, and there are two more documents for event-based revenue recognition. One is for leading ledger 0L, and the other one is for IFRS ledger 2L. In both the revenue recognition documents, we can see that the deferred revenue is credited with the transaction price, and the corresponding entry happened in the revenue adjustment P&L account. A quick look in the revenue recognition dashboard, you can see that there is one more entry in the balance sheet in the liability side right now, which is the deferred revenue which got generated during the billing. A quick look in the sales order actual data report, you can see that there are two more entries which have been added for the line item 10 per se, that is WIP deferred revenue and actual billed revenue, that is domestic product revenue. Now after the final billing has happened as part of the period end closing activity, when we will be running the event-based revenue recognition run for the sales order for the final time, for local gap you can see that like normal sales, both accrued revenue and deferred revenue amount has become 0. There were no entries in the unbilled revenue anyway, so this is as expected for local gap. If you see the dashboard report for event-based revenue recognition, you can see that the balance sheet side, both asset and liability has become 0. There is no entry in the accrued revenue and deferred revenue side. The recognized revenue is equal to the billed revenue, which is 50 USD, which is equal to the transaction price, and there is no unbilled revenue. It is got affected in the chart as well. You can see there is one more parameter for billed revenue. This is the final figure of sales order actual data report in local gap. When the event-based revenue recognition is run for the sales order according to the IFRS accounting principle, we can see that the accrued and deferred revenue which were posted before for both the line items are still there, though the unbilled revenue has become 0. So the total accrued revenue in the sales order label is 0, but the item level accrued and deferred revenue are still there. So in the event-based revenue recognition dashboard report, you can see that the recognized revenue is finally as per the allocated revenue price, not as the transaction price. So the billed revenue, which is the actual revenue, is as per the transaction price, the actual net price of the sales order, but the recognized revenue is actually more than that. That is as per the allocated revenue, and as a result, there is some residual entry in the balance sheet in the accrued revenue side for the line item 10, and in the deferred revenue side in the liability side for line item 20. So the sales order actual data report shows like this at the end of the total cycle in the IFRS ledger. As you can see that there are some residual entries for accrued revenue and deferred revenue for the line item 10 and 20 respectively, which got nullified at the header level. So if I do the account of all the documents that got posted at different stages, starting from creation of the sales order, and then during the PGI, then revenue recognition run at period end, and then the final billing, and then the final revenue recognition run. So for all these 5 steps, if I take account of all the documents that got posted, we can see this is the final result that it looks like. I am not going to explain all the postings one by one because I have explained them on the go. So please take a snapshot of this, and you can reconcile at the end when you will be running it on your own. So this concludes the video. Thank you very much for sticking in. It's a bit longer than expected. I wanted to give as much information as I had in my kitty. Hope you like the video. If not, please mention it, give your feedback. I think that nothing is worse than ignorance. So please give your feedback and like and subscribe. Thank you.